Hello, everyone. Thank you for taking some time out of your evening to join us for the webinar. I'm sure that you're going to not only enjoy it, but walk away with a lot of information that you can use. Chock full of education. That's how I like to describe tonight's webinar. And I am Gina, and I'll tell you a little bit more about myself here in just a few moments, but I wanted to let you know that we've got another team member of ours tonight working with us, and that's Jonathan from our development team. He's going to be answering any questions that you may have as we move along today's webinar. So if you've got any questions at all, feel free to type them in, and he'll go ahead and begin to answer any questions. So I'll let Jonathan say hello to you guys.
Hi everyone, I hope you can hear me clearly. As Gina just said, I'm going to be trying to answer your questions as we go along. What I would ask, just to make things work a little bit more smoothly and so we don't have to sit here for 3 hours afterwards, if you just ask a question and ask it once only. What I'm going to do, if I see a question that is more specific and not really of general interest to people, then I'll answer you directly through the chat. If it's a question that seems to be popping up quite frequently, then I will just keep those to the end and then run through, and hopefully we can get all the questions out of the way in about 5 minutes at the end of the webinar. So I'll hand you back to Gina, and good luck. I hope you enjoy the webinar and all the content we've got for you.
All right, thank you, Jonathan. And again, Jonathan is your go-to man if you've got any questions about anything that I'm explaining through tonight. So let me tell you a little bit about myself before we get started so that hopefully you'll know that you're in good hands. Again, my name is Gina, and I've been working with the Profit in 60 Seconds team now for several months. And I have to tell you, I have loved every single minute of it. Now, besides working with the Profit in 60 Seconds team and loving trading, I've been a full-time trader for 8 years now, mostly in Forex, but also in binary options, which is what we're talking about tonight. Now, I'm also a trading system developer. So, again, you're in good hands. We're going to spend about 40 minutes with one another tonight. So, again, any questions, feel free to ask us, and then we'll also have a time at the end of the webinar where you can ask some questions as well. We're going to be covering quite a few topics tonight, but before I get into what we're going to be covering, I want to let you know that at the end of the webinar, we've got a very special bonus offer for all of you who are attending tonight. So be sure to hang on until the end of the webinar so that you can learn a little bit more about that. So today we're going to be talking about the advantages of binary options over Forex. We're going to be talking about why that can be so profitable for you all. We're also going to be talking about 1-minute binary options versus longer time frame binary options and the key to fast and accurate profits. We're also going to talk about the key to making money from 60-second binary options. We're going to talk about what's behind the Profit in 60 Seconds software and what makes us different from some of the other guys that are out there. We are also going to talk about what makes our software work so well, and I'm sure what so many of you want to know is how much you can make. And then at the end, we'll take some questions from you, and of course, you don't have to wait until the end. You can go ahead and send those questions over to Jonathan as we get started. So we're talking about binary options tonight. Now, I want to talk to you about one of the main reasons why I switched to binary options. It's because of the simplicity, plain and simple. And what I mean by simplicity is that you only have to be right about the direction of the asset that you're trading. You don't have to worry about how far price should go in your direction. Now, there are 2 other little bonuses that come along with binary options. And one of those is limited risk, and the other one is predetermined reward. So it's much easier for us to speculate and get things right with technical analysis. So let's get started. Why is it that binary options can be so profitable over Forex? Now, let's start with a very important topic, and this is one that I believe to be fundamentally relevant for anyone who is thinking about getting into binary options, and that's this: the key advantages of trading binary options over trading Forex. So everybody knows that binary options are based on the Forex market. The prices will usually vary, however, slightly, because option pricing takes any remaining time that's going to expire into consideration. And that's one of those things that often results in a difference of a few pips between an option price and the spot Forex price of any given currency pair. So one of the key differences that we're looking at is that you are simply trading call or put options on a specific currency pair. What you're doing is you're speculating whether that pair is likely to end up higher or lower than its current price at the end of that option period. And we're looking at either a minute, 15 minutes, 30 minutes, an hour, a day, a week, or even a month from now. So let's look at a quick example. Now, if you want to buy a pound dollar call option because you think that price is going to go up, let's say the price might be 1.64205. Now, when the option expires at the end of that minute, the price only needs to be above your entry price. And we're talking about just one tick being enough for you to make up to 80% return on your trade. So if I had placed a $10 trade, you'd have made an $8 net profit. So what you've got to focus on is just get the direction right between placing your trade and the option that's expiring to bank gains of anywhere between 75 to 80% on each trade. And yes, those are some huge returns. So whichever way you look at it, being able to earn large returns from even tiny price changes is one of those huge advantages that we're talking about. So again, direction. Now, when we're looking at Forex, if we're contrasting Forex with binary options, trading Forex with a Forex broker, it requires a lot more thought. We're also talking about a lot more skill. And yeah, you're still doing the same thing that you're doing in binary options, which is speculating on the price direction. So because binary options are based on the Forex market, but to make any decent money with Forex, that price has to move a long way in your favor when you're looking at binary options versus Forex. So for example, to make an $8 return on a $10 trade, you might need that price to move 80 pips in your direction, not just one pip like with binary options. So that's a lot. It's definitely a big difference between the two. The bottom line that we're looking at here is that trading Forex means that you need to not only get the direction right, but you also have to ride that trade to its full extent in order to make any decent returns. And that's not only something that is really hard to do, but it's also very risky to do. Okay, so we've got to look at all of that. So let's just suppose that the price of a pound dollar is 1.6376, and you think that that price is going to go up. Now, if you remember that $8 that we just talked about a few moments ago, in order for you to make that same $8 that you made in the pound dollar binary options example and risk that same $10, then you might need that price to move up to 1.6456. So think about that carefully. With Forex, that price would need to move up from 1.6376 to 1.6456. Now that's 80 pips in order to make $8. Yet with binary options, it would only need to reach 1.6377. We're talking the same risk, same profit, But the difference is that you only need a 1 pip move with binary options compared to that 80 pip move in Forex. So trust me, this is hard to get right. And a lot of people can't get a 10 pip move right. So what chance of getting an 80 pip move right do they have? Now the Forex market is so volatile that the more pips you need, the harder it is to achieve, even if you are a technical analysis genius. So let's put things into perspective. Forex trading means that you need price to move 80 times further to make that same gain as with binary options. So we're talking about 1 pip versus 80 pips. And hopefully right now, as I'm going through this and you're looking at the charts and you're hearing the examples, you're starting to understand a little bit more clearly why binary options can be so much better. My objective here tonight is to make sure that you understand why it's so much easier and more profitable to trade binary options than it is to trade Forex. A system that is able to speculate accurately on the direction of a currency pair is all you're going to need to make 75 to 80% on your money. And we're talking about you being able to do this over and over again. And if you get that system right, then really at the end of the day, the sky is the limit. And if you do it right, trading binary options is going to be a great source of income for you. And I know that as you're listening to some of these numbers, you're thinking, wait a minute, is this some type of exaggeration? But it's really not. It's not even rocket science. This is simple to understand. It just looks like it to some people, especially if you're starting to look at charts and things of that nature. But I want you to look at trading binary options as everything else in life. You know, when we're looking at daily things that occur around us, all of the mystery disappears once you actually learn how to do something. I mean, you think about it. The first time that you do something, you may not be so sure, but the more you do it and the more you're comfortable with it, then the more you have confidence in what you're doing. And it's the same thing here. The more you do it, the more the mystery is going to disappear. Now, I want us to get ready to move on to the next topic. And for me, it's something that's pretty important. And that is the best time frame for you to trade binary options. Okay, so what's that best time frame? Now, as far as I'm concerned, it's going to be that time frame that yields the largest and most consistent profits for you. That's what we're aiming for. A 1-minute binary option versus the longer time frame binary option, the key here is fast and accurate profits. So I'm going to start this particular topic with the following question for you. And here's something I want you to think about. What is easier for us to speculate on? Is it something that's going to happen an hour from now? Or is it something that's going to happen in the next minute? Let's forget about trading for a moment. You know, I was telling you just a few moments ago, it's about demystifying things. And it's just like everything else in life. The more you know about it, the more you understand it, the more you have confidence in it. And that's the same concept here. So we're going to take a second to look at it from a different angle. And we're talking real life here. Okay, suppose it just started to rain. What's going to be easier and more accurate for you to predict? Is it going to be how forceful that rain is going to be 1 minute from now? Or is it going to be easier and more accurate for you to predict what's going to happen in 30 minutes in terms of the rain, how forceful it's going to be? For me, I think it's going to be much easier in that 1 minute, and hopefully you're thinking the same thing. Let's use another example. We've all stood in a line somewhere. I'll use the example of a supermarket. You've got 5 people behind you in line at the supermarket. What's going to be easier for you to predict? How many people are going to be behind you 1 minute from now or 10 minutes from now? Now, I know a lot of these examples are probably sounding a little bit out of context to you, and you're probably thinking, Gina, how is this fitting into the context of what we're talking about? It really does fit, because for some reason, a lot of people tend to put trading into another category or into some place that it's difficult or mystical or something like that. But in reality, trading is about pure speculation, just like everything else in life. Those two examples I just gave you, same thing. So, I like to say, let's keep it simple in terms of how we think about trading. Now, life for us is actually a constant stream of speculations over what's going to happen next. I mean, think about it. Think about what you've thought about during the course of the day and what's going to go on from here or there, or even what you're going to do after the webinar. So the shorter the time frame that you're trying to speculate on, the more accurate and the more profitable that you can be. It's just a simple observation of life and trading. Okay, that's it. So let's take a look at this chart for a moment. Now, if we go back to that 1 pip, 80 pip example that I mentioned to you earlier, ignoring the more important news announcements, okay, it could easily take a currency pair an hour, maybe even several hours, to move 80 pips and make that profit. So as I said before, it's very hard and it's also very risky to speculate on what will happen to price over the next 1 or 2, 3, 4, or even more hours than that from now. Now, with the right system, if you've got the right system in your hands, it's going to be much easier for you to speculate if the pound dollar will be up or down by at least 1 pip within the next 60 seconds. So what I recommend for you guys to look at is to focus on shorter time frames. The shorter the time frame, the better. In fact, with 1 minute, I think that's going to be ideal for you to be looking at. Now, that being said, you still have to know how to speculate correctly. I mean, even on small time frames, like 60 seconds, the last thing that you want to do is get caught up in a market that is choppy and has no direction. That is going to kill your performance very quickly. So the trick here is being able to filter out what that noise is that's present in choppy market conditions that do happen occasionally. You got to be able to shut that outside noise out and look at what is a genuine directional market condition. What those market conditions are right there, those genuine directional ones. And that's exactly what the Profit in 60 Seconds system does so well. It separates those low probability trade opportunities that are caused by choppy market conditions from those trade opportunities that are the best of the best, that are found in directional market conditions. Okay, so we all are here for the same reason, right? It's about money, and I'm sure that you guys want to say, hey, let's talk about how much money that I can possibly make. So we're going to look at that here in just a second, but before I do that, I just wanted to remind you that at the end of the webinar, we're going to be talking about a special bonus that we have for you all spending some time with us tonight and learning about the Profit in 60 Seconds system. And it's going to be something that's not only going to help you get on the way to making money really quickly, but it's also going to help you save some money as well. But we'll talk about that more at the end of the webinar. And also, I want to let you know that, just as a reminder, if you've got questions as we go along, you don't have to wait until the question and answer session. You can go ahead and send those over to my team member, Jonathan, who is available to answer those for you right now. Okay, so talking about that important stuff, money. We want to make money. That's why we're all here. So let's be honest. We want to make sure that when you're making this money, it's going to be the maximum amount that you can make, right? You want to make the most money possible. So that's going to lead us into this discussion. And that's the key to making money from 60-second binary options. And you'll be impressed to know that I can summarize this up for you in 2 words: direction and volatility. You get those 2 elements right in the trade, and you are on your way to making as much money as you want. And I'm talking literally. Let's start with the direction. If you're trading a call and then you expect the market to close above that current price, then conversely, when you're trading a put, you're expecting the market to close below current price. And that just needs to happen within the next 60 seconds. So hopefully that's all pretty simple and clear for everyone right now. In practice, there are 2 elements that are important when it comes to looking at direction. Okay, so the first one is direction within the next 60 seconds. And the second thing is the direction during the last 3 to 4 minutes. So now the direction during the last 3 to 4 minutes is the foundation of the trade. So keep that in mind. Now, direction within the next 60 seconds, that's the trigger of the trade. So this is something that's very important to grasp. Now, the reason why those last 3 to 4 minutes are only the foundation of the trade, we're looking at something that is going to be an indicator of past market movement, and that's not something that guarantees future market movement. Okay, so again, the reason why those last 3 to 4 minutes are only the foundation of the trade rather than the trigger is because the past market movement does not guarantee any future market movement. Now, if the market was generally moving down for the last 3 minutes, it would seem reasonable to trade a put. But it's reckless to pull the trigger based solely on that factor, okay? Now, the reason is that the past market action is not a guarantee of future market action. We all know that. I mean, we've had days where it's up and down, up and down. We don't know. You've seen the words, I'm sure, on any trading website that you've ever visited where they're saying to you, we cannot guarantee that the past market action and how that's performed is going to be any indication or guarantee of how it's going to perform in the future. Now, don't get me wrong. It's a great filter, especially if you know how to do it properly. But even the last 3 to 4 minutes helps provide the clues to which direction that market is likely to keep flowing in. But to really raise your chances of achieving a profitable trade, then you'll need the more qualifying criteria, and that is the trigger. Now, a confirmation of what will really happen in the next 60 seconds, that's where the volatility enters into the equation for us. So if you can get the direction and the volatility factor right, and when I'm talking about to a high probability now, then you can consistently make money. And one of the things that we've worked very hard on here at Profit in 60 Seconds is to make sure that these 2 elements are something that's key. Now, when I'm saying that we're working hard, there's a lot that goes into the preparation of the system, and I'm going to get to that in just a few moments for you. So when we're looking at 2 elements that we've developed, signal software, we worked very, very hard on because they're key. And I'd say it's also the main reason that most people don't make money from trading binary options, because they don't get that right. And that's where we come in. Now, when I was looking at going into talking about the volatility of the market tonight, I was thinking, okay, how am I going to explain this to them? And I considered doing it in a more academic way. But, you know, honestly, we all know that, a lot of times the academic way of explaining something is also the more boring way, and we definitely don't want to have you bored tonight. And honestly, it's irrelevant to what we're talking about in the webinar right now. So what I want to do is cover it in the simplest way that I can that's still also correct in terms of the binary options. And in this respect, volatility is simply the speed of price change. Just that simple. In fact, I'll break it down into even simpler terms. If the price of a currency pair is changing by 1 pip, say every 3 to 4 minutes, then volatility is considered low. But if the price was changing 1 pip several times each second, and we're not talking about the direction, okay? Direction is not relevant. Then if it's changing pip every few seconds, several times each second, then that volatility is going to be considered high. So here's the key. If you want to establish the right directionality, if you want to make sure that you're headed in the right direction from the past 3 to 4 minutes, and you ensure that volatility isn't going to be too high or too low, then you've got yourself a very high probability binary option trade. Getting volatility in that perfect range is really important, okay? So let's keep that in mind. So if the price is changing too fast, or even if it's too slow, then it's really hard for us to have confidence that that price is going to continue in the same direction that it has been, right? However, if the price has been changing within a fairly consistent volatility range for the past 3 to 4 minutes, that's the trigger that's going to confirm the pair should continue in the same direction. So if you establish direction and volatility correctly, then you can profit with a very high degree of consistency. You're going to feel a lot more confident in what you're doing. And that's exactly what we do here with the Profit in 60 Seconds software. And that leads me to what I would like to cover next for you guys. I know that some of you are probably wondering, okay, so what's behind the Profit in 60 Seconds software? So let's talk a little bit about what we did in terms of the strategy that's used by the software. Now, I'm not sure how many of you are into trading, but I'm guessing that a lot of you have had some exposure to stocks, futures, ETFs, Forex, or even options. Now that you've had that experience, that's going to help you just a little bit. But for those of you who haven't, there are basically two approaches to the market analysis which traders tend to base their trading decisions upon, okay? And that's technical and fundamental. Now, the technical analysis basically looks at price patterns, ratios, and things of that nature. It's probably the most common basic trend line or simple moving average. More useful for us, though, is price formations such as triangles, double tops, double bottoms, things of that nature. Now, fundamental analysis looks at financial reports. It looks at things like political outlooks, even weather patterns, etc. Now, this approach is one that is used much less for trading purposes, but it is well suited for some long-term investing purposes. So I don't want you to think that it doesn't have its place. That makes fundamental analysis fairly irrelevant for us and for our purposes. I mean, we're talking even less so for 60-second trades. So when we focus on the technical analysis, we're generally looking for 3 major scenarios to occur. We're looking at the market trends. We're looking at market consolidations, price going sideways within an established range. And then we're also looking at the market reversals. So back to the Profit in 60 Seconds software. The strategy within the software is the reason it's so profitable. It's based on a very complex technical analysis strategy that takes 3 elements into consideration. And that's the volatility, direction, and that automatic adjustment to new market conditions or behavior. And what our software does is it analyzes the average volatility of the last 10 minutes or so. And then it uses that information in our proprietary algorithm to establish that direction and the directional probability that's based on the past market direction. So when I say past market direction, I'm talking about the last 3 to 4 minutes. That's usually 3 minutes on average if the trend is stronger, and 4 minutes if it's a bit weaker, because we want additional confirmation. We all want to make sure in some ways, right? Now, at the same time, the system continuously adjusts itself to market conditions and behavior. So that's one of the things that makes us very special. Now, this is a key consideration, and it's also one of the most important parts of the strategy as far as I'm concerned. The reason? It's pretty simple. Markets change constantly. We know that. They change personality and they change behavior. And when I'm talking about behavior, what I mean is the overall behavior of the market, not just the last few minutes. So any effective system has got to be able to trade within those current market conditions, that current context of what's going on in the market. That's the new reality, right? So trading within the current context is the key to profitable trading. So always try to remember that. So the next topic I want us to cover is directly linked to what we've been discussing up to now. Why does the software work so well? And again, how much can you make? This is where I want to actually go into some more detail and give you some trade examples so that you can understand exactly what's going on each time a signal is triggered. It's going to be fairly easy to understand, but of course, if there's anything that you don't quite follow, then you're welcome to ask any questions to Jonathan right now, or you can also ask during the question and answer session that's at the end of the webinar. And we do tend to have a lot of questions that come in. So if you'll just ask the question once, he'll definitely get to you. So you don't have to worry about that. Again, that's Jonathan. Ask the questions, ask away. So if it takes a few moments for us to get to you, don't fear. We are definitely looking at the questions and answering them as they come in. So what we're going
I'll just jump in there quickly.
Yes. Jonathan?
Did I step on your toes?
Yes. Go ahead.
Yeah,
no,
hi.
You're fine. Go ahead.
Yeah, just for people that are asking questions, there are a lot of questions coming through, and some of them are specific, which I'm trying to answer directly, and a lot of them are just repeats of the same questions. So all of these repeat questions, I'm making a list of them, and I'll go through them at the end of the webinar to save everybody time, and so that the direct questions get answered a bit faster. If you've typed a question and you don't see a response back from me, please don't keep posting the same question, because it just makes the list longer and it doesn't help the situation. So if you can just do that little favor for me, that'd be great, and I'll get as many questions answered as I can at the end of the webinar.
Okay. Thanks so much for that, Jonathan. I really appreciate that, and I'm sure that others will appreciate that as well as they're waiting to have their questions answered. So let's touch on a few key areas right now. And the first one that we're going to talk about is risk tolerance. Now, it stands to reason that the lower probability signals are going to have a lower accuracy rate. However, there are far more 75% or even lower probability signals, which means that over the long run, you could make as much money as with the higher probability signals. You could probably even make more. But, and there's always a but, yes, you're going to get more signals. But with that, you're also going to see more losing trades too. So keep that in mind. Now, ultimately, it's all a matter of character and what makes you comfortable, what you're comfortable with. Because both of these approaches can make you really good money. It just comes down to how risk-oriented you are and how often you need to hear your cash register ring, see your bank balance go up, Maybe you're a person who says, you know what, I'm going to go big or I'm going home. Or you may be one of those people that just says, you know what, let me just kind of see how this goes, get my feet wet, get more comfortable, and I just don't want as high of a risk factor. And that's great. That's fine. Whatever works for you is going to be fine because there's no right or wrong in that sense. We tend to see a lot of traders, though, starting out on the higher probability signals. But once they get more comfortable with the software and they're demystifying everything like we were talking earlier, and they're more comfortable with the results that they're getting, then they start taking lower probability signals. And they're also more accepting of the more frequent losing trades because they're trading more and most importantly, they're maintaining a really good average profit. So if your risk tolerance is low, just wait for the signals with an 80% or higher probability. I mean, sure, you're going to take fewer trades. That's a given. But you'll hear the cash register ring more often, see that bank balance tick up more often for you. However, if your risk tolerance is high, then you could go for signals where the probability is as low as 70%. You're going to have more losing trades, yes, but you're also going to see over time a better bottom line. I mean, you're going to see more successful trades. So again, what we're looking for over time is a better bottom line. Now anyway, as I was saying, it's really a matter of what your personality is. There are some people that prefer more action, and I have friends who do trade and they really get for lack of a better term, a high. They off of getting that more action and good profits. While there are others out there who prefer to take it slower, so they prefer less action and higher profits. Whatever approach that you decide to take is fine. What I want you to think about is the key currency pairs that we trade in. And they are the euro dollar, pound dollar, dollar franc, Swiss franc, Australian dollar, US dollar, Japanese yen, and pound euro. You may be asking why. Why are you only, why are those the key currency pairs that you trade in? Well, it's because those pairs present the best and most accurate, and most importantly, for some of you, it's the most profitable trade opportunities. So in fact, those pairs that I just mentioned to you, they result in around 240 to 300 potential trades per day. Of those trades, about half of those could be 80% probability or above. That's about 120 to 150 potential trade opportunities for you per day, and more than enough signals for those of you who may be a little bit more averse to risk. You want to take it slower. And as I said, what works for you is fine. Now, a lot of people are always asking us, okay, so how much is the ideal starting account? How much should I start my account with? Well, to be honest, there's no ideal starting account size. It all depends on what your personal circumstances are. Now, the only golden rule here is that you never, ever trade with money that you can't afford to lose. So if you're losing your deposit is going to affect your life or that of your family in any way, shape, or form, then perhaps now is not a good time for you to get involved with trading. You may want to wait until things are a little bit more stable for you. But assuming that everyone's clear with what I was just saying, someone new to this industry should be perfectly fine with, say, a $200 to $300 initial deposit to just test the waters and see how it goes for you. Let's look at a trade example, and then we'll take it from here. 5 trades, 4 winners, 1 loser. So let's work through what the chart that you're looking at on the screen is showing you. Let's start with the price range that's between the 2 blue lines. The software detects what's called a sideways market. In other words, price is just moving sideways within a fairly narrow range. It's not trending. Now this is something that is key, okay? Keep this, I definitely want you to keep this in mind, and if you're taking notes, be sure to remember that this is a key requirement because strong moves tend to occur when price breaks out of these range formations. Most of the binary options systems fail because they get caught by the sideways market conditions, where it's practically impossible to place a trade with any reasonable accuracy. Now, as you can see on the chart, the market broke downward, and that's what's shown in the bars that's labeled 1, 2, and 3. So if you look at these 3 bars, you're going to notice that the opens are right near the start of each bar, and the closes are right near the very end. Now, this is an indication of a strong 3-minute trend, which put together with the software's volatility indicator, it makes a great basis for a put trade. The degree of volatility and the strength of the directionality would justify 85 to 90% probability put signals, as you can see on those 2 1-minute bars that are labeled A. Now, after the 2 high probability trades, the strength of that trend and volatility reading is what's commonly causing that percentage probability to go down, which is what you can see on the 2 1-minute bars labeled B. So now, although both of these were successful, the risk when taking them was higher. Now, if you look at the bar that's labeled C, it corresponds to a 75 to 80% probability signal for the same reasons that we discussed already. Again, the trade was successful, but the probability was lower than the first signal, the one that's labeled A. And that's because that ranging market formation that was prior to it, that's shown in the blue lines, it was shorter and the volatility reading was lower. Now let's look at bar D. It's corresponding with a 70 to 75% probability signal as well. However, this is a trade that ended up as a loser. So I'm hoping that all of this is making sense to everyone as I'm walking through it. Now, I want to take a look at some other things, and I want to tell you right now, I want to stop and thank you guys for sticking with me. And we're going to be wrapping up here shortly. We should be winding up on time, so you'll have adequate enough time to ask any questions at the end and see those questions that Jonathan mentioned a few moments ago are those commonly asked questions. He's going to save all of those until the end and answer all of those at one time. So with this, I'm going to use a $200 starting deposit as a point of reference. And just so that you get the picture, that trade scenario that we just covered with about 4 to 5 consecutive trades, that happens about 10 to 15 times a day on each of those main currency pairs that we covered earlier. And we're looking about 50 times per day in total. So let's get our calculators out and see how this is going to work with a more specific example. When we're looking at about 150 to 200 signals per day with a probability of around 80% and above, you could very easily find 10 to 15 minute trades, 10 to 15 trades within a 30-minute period of time. Again, let me go back over that. With around 150 to 200 signals per day that have 80% probability and above, easily you should be able to find 10 to 15 trades within a 30-minute period. Sometimes, yes, it does get a little crazy, and sometimes it's more sedate. But a good average is about 10 to 15. So if each of the trades that we're looking at in that 30-minute range is $20, then that's how much you stand to lose each time. If we assume that there's a 75% return for each of those winning trades, then each of those winners is going to earn you $15. And there are some trades that will pay 80% or more. But for the example that I'm giving you right now, I want to make sure that I stick on the lower side. So with a conservative probability rate of around 75%, you'd be making about $165 profit. And we're talking about if you do 11 trades and they're at $15 each, you're looking at $165 profit. But let's say if you do 4 trades at $20, that's an $80 loss. However, you still get a net profit of over $80 per day, and that's on a $200 account. So as I am looking at it, that's a pretty good profit for a day, especially if you're looking at a $200 account. So I hope that the examples that I've given you have shown how easy this is for you. We're at the end of our webinar, and I hope that things are clear. If they're not, team member Jonathan is taking your questions. And if you're just joining us, or if maybe you fell out at that part of the webinar, because we know sometimes technical glitches occur, there are some questions that are frequently asked questions, and he's saving those to the end of the webinar and the question and answer period that's coming up in just a few moments. And we do have a lot of questions coming in. So if yours hasn't gotten answered yet, if you'll just have a little bit of patience, we're definitely going to get to you. Now, if you remember, I mentioned to you at the very beginning of the webinar that there are special bonuses for you guys that are attending tonight. So what I'd like you to do at the end of the webinar and after the question and answer session is to check your email, because we've sent you a message that contains all of the details of the bonus offer. It's something that's going to not only give you a more than just a free 1-month trial, which is what we typically tend to do, but this one's going to give you 3 months, and we're also going to look at upgrading you to the pro version, okay? If for some reason you look in your email and you don't see the message that contains the details of the bonus offer, check your spam folder, make sure that it didn't go there. And if you didn't have it, that's okay. Because if you decide that you want to set up an account with one of our preferred brokers and you join us and deposit money, we're going to have all of the information of the attendees from tonight's session. So just make sure that if you do set up an account, then you're using that same email address, same information, so that our system can match it. So you're going to get that automatic email with all of the information after the webinar. And again, I'm Gina. I hope that I have helped you understand trading binary options a little bit more clearly. We've got our question and answer session that is opening now. Jonathan has been diligently answering questions throughout the webinar, and he's going to continue to do so. And he's also going to have a list of frequently asked questions that he's been getting several times from several attendees, and he'll answer that. So just hang around, stick with us a little bit longer to see if your question is answered. And you never know. Someone may ask a question that you didn't think about that's also going to help you. So again, I'm Gina with the Profit in 60 Seconds team. Thank you again for attending our webinar, and we are now entering into our question and answer session. Thanks for attending.
Okay, everyone. Well, I'm glad you managed to sit out through the webinar. Some of you have seen answers directly, and I've just got to, actually, it's turned out to be a fairly short list of questions that just got asked an awful lot this afternoon. So I'll run through these, and hopefully you'll remember writing the question to me earlier. So the first one is, which brokers are trustworthy? Now that's a good question. There are an awful lot of brokers in the market. I think it's probably nudging around the 400 mark. So out of 400 brokers, you know, it's just common sense that some are going to be good and some are not going to be so good. Probably some are going to be pretty terrible. What we do, and what we have done since we launched the product, is to essentially vet brokers to find ones that are good in terms of their customer service, in terms of making withdrawals, in terms of stability, the security of your funds, that kind of thing. And those brokers come on or off our panel as we feel that they're meeting the grade or they're not. So if we recommend a broker to you, and our system normally recommends brokers as you register, then you can be confident that you're not going to have any problems with them. Now, one thing that has cropped up quite a bit, and in fairness, it's not really the broker's fault, but I do know that a lot of people have complained with some brokers that they have problems making withdrawals. When you make a withdrawal, the broker needs to meet the requirements for the anti-money laundering laws and regulations in the jurisdiction they're based in. And those regulations are fairly common around the world, but there are some differences. What you tend to find is that brokers will make it very easy for you to open an account and to deposit the funds, because they only actually have to worry about the AML side when they're paying money out to somebody. So they may well ask you for some information, or sometimes for a lot of information that you might consider as a bit intrusive. It's not because they're trying to be awkward, it's because they're just trying to meet the requirements of their regulation in the jurisdiction they're based in. So I wanted to get that one out of the way just while it was in my mind. Okay, kind of a similar question, which brokers are safe for US traders? Well, basically the ones that come up on our recommendation list. So when you register, the system does try to work out where you are globally, and then it will offer brokers that meet your requirements. So if you're in the US, we try to ensure that we've picked up that's where you are, and we will offer you a broker that allows US residents to work with them. But generally speaking, you should see brokers that are relevant to your region, and all of the brokers that we recommend have already been vetted. We work with them quite closely, and you really shouldn't have any problems at all. Next question. Gina did cover this, but I'll go over it again. What's the best starting balance? Really, that comes down to you. If you're a more experienced trader, then you might want to jump in a bit more heavily than somebody who's a complete newbie. We find that if you aim somewhere around the $200, maybe $250 level, that should be a really good starting point. You can definitely test the water with that. You can make some reasonable money, which is the whole reason you're doing this in the first place, and you're not going to break the bank. Next question was, what's the best time of day to trade? Now, theoretically, there is no best time. The system is generating signals around the clock. The probability should be the same for all of the signals. Now, obviously, the Asian session tends to be quieter. The US session will be the mid-range, and the London session is the wildest of the three. So if you are finding that you're having problems in a particular session, just try a different one. There's no right or wrong. Each session does trade profitably. We trade all three sessions all of the time, but certain people's personalities, the speed they place a trade, the broker they're with, the speed of their internet connection can all factor into making things work or sometimes not work for you. So if you're having some issues, then just try a different session and see how you get on. You may find that cures everything for you just in a heartbeat. What else have we got here? Where's the link for the offer? The system will be sending out an email. It's actually pulling off all of the attendees from the webinar, so the system's delayed until I finish talking to you. And then all of the email addresses will get imported, and the email will go out that contains a link. Now, it is basically just to the main Profit in 60 Seconds website. If you go through and register, open your account and fund it, the system will pick up the fact that you attended the webinar because we've got your email addresses. So just make sure you use the same email address you used for this webinar registration, and you should be good to go. Somebody or several people actually asked, why do our recommended brokers not offer all of the 22 pairs that Profit in 60 Seconds generates signals for? And there isn't a kind of good answer for this. It's just reality. Some brokers concentrate on certain pairs, some brokers don't. So what we try to do is to actually spread our clients between brokers on our panel. And the reason we do that is actually to try and ensure that you get better liquidity. And that'll actually lead into another question that was asked, which is where does the profit come from, or are you trading against the broker? The reality is that the broker is trying to match up trades between their own clients. Unlike the Forex market, which is a much more widespread network of traders, with binary options, you're trading clients of the brokerage you're with. So if you have two people trading euro-dollar on a 1 minute, one person is going to trade $10 on a call, another person trades $10 on a put. One of them is going to lose. The one that loses waves goodbye to $10. The one that wins receives $8 as their gain, for example, and the difference goes to the broker. So you're not actually trading against the broker, you're just trading against clients within the broker. And so we try to distribute all of the Profit in 60 Seconds clients between various brokers so that we don't have a situation where a single broker suddenly has a huge number of Profit in 60 Seconds clients who would all be trading in the same direction, and they've got nobody to match those trades against. So hopefully that kind of answers the question and makes a bit of sense, because I do see this question coming up quite a lot. Can I do this from India? Yes, indeed you can. You can do this from basically any country that is able to work with the brokers that we have on our panel. There are some countries that basically aren't acceptable, places like Iran, Iraq, that are part of international embargoes on financial transactions. But for most countries, you don't have a problem. We have brokers on the panel that will accept people from just about everywhere. My web connection is poor. Can that affect things? Yes, it can. It really just depends on a combination of factors. There usually isn't much of a delay getting a signal from our server through to the Profit in 60 Seconds software, but some people may experience a problem if they have a particularly poor internet connection. So if that's the case, you can try running from somewhere else. The fact that we have the web version means you can pretty much just run down to your local internet cafe and see whether you get a better result from there. And fingers crossed that will sort the problem out for you. There isn't much point, if you do have a poor internet connection, somebody asked if it was worth getting a VPS or a virtual server and running our software from that. In truth, there's no advantage, because you'd still have a lag between the virtual server and your own computer, so you still wouldn't see the signal fast enough if that was causing the actual problem. Okay, next one. Will the system work on my Mac? Or probably a few other things now. The downloadable software is Windows only. Now, it is possible to run Windows applications on a Mac, but to be perfectly honest, I really wouldn't bother with it. It's just a lot of aggravation for not really any advantage. You're much better just to use the web-based version through your browser on a Mac, just as you would if you're on a mobile device, your iPhone, iPad, that kind of thing, or an Android device. So unless you're a technical person by nature, just use the desktop software for Windows machines and use the web-based version with everything else. And to answer a follow-on question from somebody else, the web-based version is included as part of your trial or your license if you purchase the lifetime license at the end of the trial period. So you'll always have both options to run with if you want to. Somebody's asking, what about 30-second options? To be honest with you, once you start going below 60 seconds, it becomes fairly problematic because the signal lifetime drops, obviously, by at least 50%. And by the time you've seen the signal trigger on the software, flipped over to your browser to work in your broker form and click the right buttons on that to get the trade placed, usually the signal is already dead. So 60 seconds is really the lowest that you ought to be looking, unless you're just doing a coin flip type of approach and hoping for the best, which, you know, there are some brokers that will do 10 seconds options on that basis, which may well be fine for you. How fast should you enter the trades? Well, generally speaking, you would look to enter the trade as soon as you see the signal trigger, because that's the closest point at which the trade looks to be right. Some people are going to be very dexterous, very far placing the trades. Other people are not going to get the trades placed quite as quickly. In most cases, it's not going to make a huge difference, but if you find that you're having difficulties, then just try to concentrate on one or two pairs and have your broker's platform already set up with those pairs, so you don't have to fumble around too much to get the trade placed. And what else have we got coming in? Any late questions? Do I need to download anything else to trade the profit in 60 seconds like MetaTrader 4? Actually, no, you don't. The original profit in 60 seconds did use MetaTrader 4 as the pricing source, but that was improved quite a few months back, and the whole thing is now server-based. So you just download our software or you just use the web-based version, and there's nothing else to install. Question, why can't we use our own preferred broker? Basically, it's to do with the licensing. First of all, we vetted the brokers that we have on our panel, and they have assisted us by hooking into our licensing system, so that as soon as you've made your deposit, the license for your version of the software gets issued to you. So that's the main reason. If we just let people use whichever broker they wanted, then the only way we could really handle it is to say they will give us the $997 now, which is the usual approach. But in order to let you have the free trial, we decided the simplest way to do things was to get the brokers to notify us as you make your deposit on your account. So I think that's probably about all of the main questions. I think we're just coming up to the point where the webinar's about to shut us off. So I hope I've been able to answer your questions. I hope you got some value from the webinar, and good luck with your trading with the Profit in 60 Seconds software.